WTF just happened to the housing market? Everyone thought real estate was untouchable. Buy a house, sit on it, and watch your net worth climb forever. But right now, the housing market looks like it's broken in half. Prices are falling in some places, exploding in others, and mortgage rates have reached levels entire generations of buyers have never seen. The dream of owning a home is slipping away for millions of people. If you don't understand what's going on, you risk making the biggest financial mistake of your life. Welcome to Wealth Rage, where we break down the chaos so you can fight back and build wealth no matter what the market throws at you. Think about this. Just a few years ago, the average American could lock in a 30-year mortgage at 3%. That meant a $400,000 house cost around $1,600 a month. Fast forward to today. Mortgage rates are hovering around 7%. That exact same house now costs nearly $2,700 every single month. Nothing about the house changed. It didn't grow an extra bedroom. It didn't suddenly sit on the beach. But because of interest rates, the payment exploded by more than $1,000. That one change has locked millions of people out of the housing market overnight. You'd think that would cause prices to collapse everywhere, right? Less demand should mean cheaper homes. But the opposite is happening in many places. Why? Because homeowners are stuck. If you bought a house in 2020 and locked in a 2.9% mortgage, why would you ever sell? Trading your house would mean swapping your cheap loan for an expensive one. That trap is what experts call the golden handcuffs of low interest. People are handcuffed to their homes, and they're not listing them. Less inventory means fewer choices for buyers, which props prices up even while demand drops. It is a bizarre freeze that makes no sense on the surface but explains why the market feels impossible to navigate. And here's the wild part. The housing market isn't one story anymore. It's multiple stories playing out at the same time. In cities like Boise, Phoenix, and Austin, prices are already down double digits. Sellers who thought they could name any price are now slashing tens of thousands just to get offers. But then you look at Miami, Chicago, or Tampa, and prices are still climbing. Why? Migration. People are leaving expensive coastal cities and pouring into cheaper states. Families are chasing affordability. Retirees are chasing warmer weather. Investors are chasing better returns. The result is a patchwork market where some neighborhoods are crashing and others are still booming. Now, let's talk about renting. If you thought renting was a safe escape from insane housing prices, think again. Nationally, rents have surged over 25% since the pandemic. In Miami, the average rent jumped from $2,500 to nearly $2,400 in just 3 years. And here's the twist nobody wants to talk about. It's not just families competing for these homes. It's Wall Street. Institutional investors like Blackstone are buying thousands of single-family homes and converting them into rentals. Hedge funds are using artificial intelligence to scan neighborhoods, predict appreciation, and outbid regular buyers. Imagine trying to buy your first home and going up against a billion-dollar fund with unlimited cash. That's the battlefield right now. Homes aren't just shelter. They've been turned into financial products, and the average person is being squeezed out of the game. So, what should you do? First, stop thinking you can time the market perfectly. Nobody can. Instead, focus on what you can control. If you're looking to buy, run the numbers on affordability. Ask yourself if the payment is something you can handle comfortably for the long term, not just in today's hype cycle. Don't overextend yourself. Don't take on a mortgage so big that one emergency wipes you out. Affordability is everything. If you're a seller, understand that buyers are more cautious than ever. The bidding wars of 2021 are gone in most cities. If you want to sell now, you may need to offer concessions or accept lower offers. That doesn't mean you can't get a good price, but it does mean you can't expect buyers to line up around the block. This market rewards realistic sellers, not dreamers. If you're an investor, cash flow should be your religion. Forget quick flips unless you're in a market you understand deeply. Instead, focus on areas where rents cover the mortgage and still leave money in your pocket. Think about growing cities, college towns, or places with job growth where demand will stay strong. Right now, investors are finding opportunities in the Midwest and parts of the South where prices are lower and rents are rising. That is how you survive volatility, by owning assets that pay you every month, no matter what the headlines say. But here's the deeper truth. Real estate has always been more about psychology than math. People don't buy homes with calculators. They buy with emotion. Buyers panic when prices rise. Sellers get greedy when the market peaks. Renters feel trapped when prices soar. That psychology is what creates bubbles and crashes. The current housing market is a battle between fear and greed. And if you want to win, you have to step back, ignore the hype, and stick to the fundamentals. The fundamentals say this: interest rates control the game. As long as rates stay high, affordability will stay low. Until rates fall, demand will stay weak. But prices won't necessarily collapse because supply is locked up by those golden handcuffs. That tension between weak demand and weak supply is why the market feels broken. And it may stay broken for years. This is creating a divide in society. On one side, wealthy buyers and institutional investors who can pay cash are still acquiring homes. On the other, the average family is being pushed further away from ownership. The dream of home ownership, once a guarantee for the middle class, is quickly becoming a privilege for the rich. This isn't just economics, it's social change. It's wealth inequality playing out in real time. But here's the opportunity. Every chaotic market creates chances for those who pay attention. If you're willing to relocate, if you're willing to analyze markets others ignore, you can still find affordable homes and profitable investments. Look at smaller cities with job growth. Look at states with lower property taxes. Look at overlooked neighborhoods that are still undervalued. This is how regular people can still win. The key is refusing to play the game on autopilot. Wealth Rage exists to give you the tools and insights to do exactly that. We're not here to sugarcoat the truth. The housing market is broken. It's unfair. It's being gamed by big money. But that doesn't mean you're powerless. It means you need to be smarter, faster, and more strategic. That's what this channel is all about. So here's your call to action. Don't wait for the old normal to come back. It's gone. The new normal is a market defined by volatility, inequality, and opportunity hidden beneath the chaos. If you're a buyer, analyze your affordability and move only when the numbers work. If you're a seller, price realistically. If you're a renter, explore relocation or creative house hacking strategies. If you're an investor, chase cash flow relentlessly. Don't get blinded by headlines. Get focused on fundamentals. The housing market is confusing, but confusion always creates openings. People who panic will lose. People who prepare will win. The question is, which one will you be? This is Wealth Rage, and we're here to make sure you're on the winning side. Smash that like button, hit subscribe, and join a community that refuses to get crushed by financial chaos. We're building wealth, we're fighting back, and we're not stopping. Because the rage isn't just in the markets. It's in us. And together, we're going to turn that rage into financial freedom.